All right, quick hitter from Robert and I.
Cardinal Hill Wealth Management.
Let's go. So here's a quick hit. We wanted to do two things today. We wanted to hit a little bit of info on SpaceX as an IPO, and then we wanted to hit a little bit of IBM today. We don't typically do individual stocks. We do just want to educate people on individual stocks and how they work.
Mm-hmm.
I'm going to share the screen here. All right.
Oh, the eternal.
All right, here we go. Looking at SpaceX.
Yeah, so what are we seeing here, Jesse? I mean, I remember when SpaceX IPO'd, people were pretty excited for those first 2 days. Yep. What happened?
Well, it did peak out really well at 2180.
Yeah.
201.80, which it IPO'd at 162. Is that right?
Something like that.
Let's see. We got 160.95. And then we zoom in a little bit tighter and we went all the way to 201. And what happens if you bought at the 160?
You're feeling good for those days, and now you're still down, though. But yeah.
I mean, that's down like not a little bit.
Yeah. Well, it's one of those things. SpaceX could absolutely, be a dominant force in the future. But the shape of this curve on the screen here is kind of what our strawman argument is on a lot of IPOs. A lot of times, not always, but a lot of times they'll have an initial pop because of hype and excitement,
euphoria, yeah.
And then pricing from professional money comes in, and it may take a couple years before the market normalizes and you understand what kind of company this is. So SpaceX is like Tesla is like many other. You're hoping for this huge increase in earnings at some point, and so we're not hating on SpaceX. It's just to educate for clients. A lot of times pricing wins in the long run, fundamentals win in the long run, as the saying goes, and we just don't yet know what SpaceX is from an earnings perspective.
That's right.
But it's been a rough go.
And we're pulling up the option change here, and it's really neat stuff. Robert knows this much better than I do.
Yeah. So basically, without going into the weeds, at this moment, SpaceX is trading at 136. And if you look at stock options, they help you understand, according to this fancy formula, Black-Scholes option pricing model, and there's other formulas to use. But what does the options market, price the risk of SpaceX at? So if you look options that expire 1 year from now, this number over here is what's called implied volatility. And basically, the options market is two people kind of making a handshake, different sides of a bet, so to speak. And right now, the pricing of this option has a 76% implied volatility. In other words, one standard deviation or 68% of priced outcomes are above or below that strike price of 140 by 78%. So let's speak this in basic, simple language. You could have a 76% downside from today at that 140 strike price, or an upside. So that's if do you think today is a good time to buy? Let me put the question back to you. Do you like an investment where you could either win or lose 75% in 1 year?
That's definitely not the investments I like.
That's not what I like personally, but some people do.
All right, moving on to IBM. I mean, this company's been around a long time, and it has been a staple actually here in where we're located, Raleigh, Durham, Chapel Hill, the Triangle. They moved one of their headquarters down here, I think back in the 70s. Mm-hmm. So it was a huge deal for us. But I like showing this because today it had a 27.7% drop. I mean, that does not feel good.
No, not at all. And some of our clients hold IBM stock as a legacy thing. Maybe, some people may have had it pass on a family, used to work there, and they're not expecting a dividend payer. In their minds, a steady Eddie. They don't expect a 27% drop overnight.
Yeah, this one hurts. I mean, we really do know people that own big positions in IBM, and they haven't wanted to sell for tax reasons, right? But if they were paying cap gains on this, they'd be paying lower than the drop, right?
Well, I mean, that is crazy. 27.7% for someone in North Carolina, almost to the penny. That's the exact long-term capital gain impact. 20% federal,
Yeah.
3.99% flat North Carolina. This is not tax advice, by the way, and 3.8% net investment income tax. So right there, you just lost.
Yeah. Right.
Your tax benefit, and you're still stuck holding. We don't know what IBM's going to do in the future.
We don't. But I mean, this chart right here just says it all. It's no fun. Diversification is great. This is not an endorsement for SpaceX or IBM one way or the other at all. This is just educational. And then here's the option change for IBM a year out. We've already built it where it's a year out.
So yeah, so even from now, you may say, well, water under the bridge, the worst news is already priced in. The options market would say from here at a strike price of 220 a year from now, there is a 53% implied volatility, thus kind of a 68% probability that the price could be above or below that 220 by a 53% range. So in other words, what does that look like? It could be 100 or so. It could be 330 or so.
Yeah.
We have no idea. Our crystal ball is foggy as always.
That's right.
Which is why we generally like to diversify.
Yep. We just thought these two events were really neat to talk about, and so we just wanted to hit them today. Thanks for watching. Like, subscribe, send us a smiley face. I don't know. It would be great.
Okay. Hopefully the audio was good.